Welcome to another Wall Street Informer production on WSI TV.
Welcome to another market update. It's March the 26th, Sunday after the market closed on March the 24th. This is where each week we take a look at the big picture, see where the market is overall, where it's going, what kind of market we're operating in, bull or bear. These are very important considerations. But also the short term, so we can align our trading strategies accordingly. We want the wind behind us. So we, to be what's the short term doing, up or down. So let's start with the very big picture now. This is a chart that goes way back to when the bull market kind of started in 2009, and what is apparent now is that really this was just two big interruptions in an otherwise long old bull market that just keeps on chugging along with no end in sight. If I zoom in just for the 3-year chart here, we see the S&P 500. As I've been explaining the last few weeks, it's got very, very high, and it's healthy that it's got to correct at some point. Really, somewhere more like down to this 40-week line, average line here, which is the blue line. That would be perfectly healthy and still have the bull market intact. But it's a long way above that. But this is a bull market. That is the big picture. Let's zoom into the short term. Look at the day-by-day chart for that, and here's what we see is going on here. This is the 50-day moving average, which is a good, interesting short-term moving average. And there's that 40-week now, which is shown in the red line. The 200-day is the equivalent of the daily chart. Negatives, the RSI is kind of a little bit below 50% there. Just hanging in there to what we call the no man's land area, that kind of 45 to 55. So it's, kind of on the verge. If it turns around here and keeps going upwards, then all good. If it goes much lower than that, then a full-blown correction, and a very healthy thing it would be, is underway. Let's just do a little bit of drawing here and see. Let's see a trend line in place here, because it's quite obvious. If we draw, remember, a trend line is the most amount of these little pegs possible with its touches. The most amount of touches over the longest period and as flat as possible is the strongest trend line and the most valid. So it depends on where you draw this. If you draw that there, like that, one could argue that, as you see here, the trend line has been broken, and no correction could be underway. If you pull the trend line down here, though, to where the kind of so-called Trump rally began, you could draw that one. But remember, the most amount of touches is what matters. And if I do it again here, you get the same story. There is a case here for a break in the upwards trend going on. I mean, sure, if I put the line down here right now, you could do this however you wanted to get the result you required. But you see, if I've done that, I've kind of cheated, because I've just gone by today's and gone backs. But so it's not an exact science. And if you looked at it like that, then you could say, okay, the trend, things are in place. Maybe if I draw some horizontal lines, which are typically more reliable, we see that that's fine. It's just a step that's going on here. But I do think, to cut a long story short, that the short-term direction of the market, it's kind of a little inflection point. And this week, what happens on Monday and Tuesday could be significant. Whether this, the full-blown correction down to this area here is underway or not. So a little bit of a sit it out and wait. But no reason to say short term why the trend is down or up, but a little bit neutral as we wait to see what happens next. I'll speak to you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.